You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
All right, welcome back, everybody. Welcome to episode, drumroll, 200. We made it. We got to 200. That's I was thinking about that before. Like, wow, oh my god, it's crept up on us, and
it's pretty amazing, isn't it?
Yeah, I was thinking we should have. I've been so busy I think both of us have been quite busy over the last couple of weeks, so we haven't done anything special, unfortunately.
We were talking like last week. Oh, what should we do? We should do something special. Well, today, the special thing is that it's a completely normal episode.
Yeah. How's that for a surprise?
We'll have to do something. We've spoke about this in the past. It's right. We just get so busy. Busy, but we've like toyed with the idea of doing like meetups, Sydney or Melbourne or something like that, doing like live podcasts, something like that. But just, I don't know. We just get so busy.
Yeah, I think
maybe we should actually, maybe next year sometime, early next year.
Yeah. I think next year we should definitely try and do more in-person episodes. I think they're always so much fun. I mean, look, it's really on me. You're the one who always comes down to Melbourne and we do them. So I need to get my act together and get down to Canberra or Sydney or wherever it is. So
maybe what we can do. Oh no, Tom said he's probably not going to America next year.
Oh, really?
Anyway, what we can do is I can come down to Melbourne and we can do a meetup maybe in Melbourne. We could potentially go to Sydney, do a meetup in Sydney, and then we could fly out to America or something like that.
Yeah, okay.
Maybe we could do something like that before the Berkshire meeting next year. Are you still keen to go to the Berkshire meeting next year?
Yeah.
Or maybe?
Yeah. No, yeah, I'm keen to go.
Okay.
Definitely want to head back there. Yeah.
Yeah, I'll go back as well. Where are we going to go this time? Do you want to do New York and then go up? Or?
I mean, I'm easy. I'm easy. Right. We'll have to sit down and organize it though. We'll get on it a little bit earlier.
Yeah. Holiday planning during the podcast.
Yeah, exactly.
Like well, yeah, or maybe we could. I don't know. We could also do it where we end up in Omaha. Last time we started in Omaha. Maybe we could do one where we end up in Omaha and the meeting is the end. Or maybe it's the middle. Maybe we start on the West Coast, get over to Omaha, end up on the East Coast. I don't know.
Yeah.
We'll figure that. Okay, maybe we should save holiday planning for another time. We're like 1 hour into the podcast and we're just like, oh, have you been to Seattle before? Where is Minnesota?
I do want to do more things with this podcast. I think we can. Something I think someone mentioned this in the comments last week, and it's something I've been thinking about as well over time. Would you be interested in trying to do some live episodes, like live streamed on YouTube? What do you think about that?
Yeah, no, I think we could. I mean, most times. Like obviously we record, we kind of already do a live episode. The only thing is that if we make a mistake, we do have the ability to edit it out, which I kind of like. But at the same time, when was the last time we made a mistake in a podcast? It's essentially live. Like we don't. Unless we make just an absolute howler and go back over something. Normally it's just us talking for an hour and we don't have to cut anything anymore. Because we're getting, I don't want to jump the gun, but we're getting a slightly better at podcasting.
What you guys don't see is my ADD brain forgets what I'm talking about, and then I have to pause for like 2 minutes and then get back on track.
Both of us. The classic example is like when we get caught up reading something is like, interestingly, the paragraph that I've totally lost my train of thought.
Yeah.
we have that occasionally, don't we?
Yeah, it's a lot harder to stay on track when it's over Zoom as well, or like over a Skype call. I find like in person, it's a lot easier to be kind of engaged.
Yeah,
I don't
definitely.
know. That's something I have trouble with.
And
but
there's like a little half-second delay between us as well, which always messes us up at some point.
Yeah, but it's only been, I mean, I can't even remember the last time we actually stopped during the podcast. So yeah, you're right. We actually pretty much do, even the entire year, it's probably like 5 or 6 times in total that we've stopped. Yeah. So yeah, we basically do it live. I think that could be fun. Probably not as a regular thing, but maybe as an occasional thing, because it of course gives the audience an opportunity to engage live. I think that could be fun. I don't know. We could try that at some point.
Something. Maybe we can do like, I don't know, like something real relaxed, like a Christmas episode or something like that. Yeah, where we can more just like banter for a little while.
Yes. Yeah. I think that would be interesting. So we'll push for some things next year. We'll come up with some fun activities. I'll have to look at and just look at what other podcasts do to kind of spice things up because I really enjoy doing this podcast. It's fun.
Yeah, it's good fun. I like that it's relaxed. I think a lot of podcasters take themselves very seriously, which is fair because a lot of the podcasts that I listen to, they are quite like serious, businessy kind of podcasts. But
I mean, if the podcast is your main gig, that makes sense. Taking it serious, it's like how you take your YouTube channel seriously. How I take my YouTube channel seriously. It's what our kind of main focus is. We obsess over it, and it can be very stressful. And the podcast is kind of a nice. It's good actually that it's not our main focus because we can just relax about it. We're not stressing about numbers. We're not stressing about how many signups we get from the. Like it's relaxed, and that's something you can't really get, unfortunately, if it's your main gig. It kind of turns into a has to be obsessing over the numbers.
Yeah,
but,
True. Yeah. That's what we were just talking about before, like just before we started the podcast. Like we were just having a little quick catch up on the guys editing over there, like who's doing what.
Brandon's tearing his hair out. No, I'm kidding.
And then I get over in the chair here and talking to you, and I'm just like, how you going, mate?
Start the timer. 1 hour break.
Should we get stuck into the episode? What do we got to talk about today? Hamish?
We've got.
What are you talking about?
So we've got the minutes from the Fed. So a little bit more of a update on how the Fed is feeling about what they're going to do going forward. And in relation to that, I also had just a little update out of the IMF, the International Monetary Fund, that gave an updated outlook on what they see happening in the market. It's always interesting to hear their perspective. What else have we got? We got a bit of update out of Meta. Released, they did their keynote, their Connect, was it the Connect conference or something like that? Connect something.
Something like that.
Yeah, they spoke about a bunch of things, including their new VR headset. What else? What have you got to talk about?
I'll talk about Tesla deliveries a little bit, semi-truck news, which is quite interesting. And Charlie Munger's released his 13F, so why not? We'll have a quick squiz at that as well.
Oh yeah, and just one thing I did want to mention. Someone commented on, I think they left this comment in the Spotify questions section. They said, "Hey Hamish, if you reached out to me randomly on Instagram, I'm flattered. Otherwise, it would seem like someone has hacked into your account." And it just reminded me, just be super careful, guys, because that's not my account. I don't think I've reached out to anybody on Instagram in like a long time. I don't even use Instagram, so I'm not hacked. It's someone makes an account that looks identical with a slightly different spelling in the Instagram username, and then what they do is they reach out to all of your followers and try and scam you out of money. So I will never ask you for money over WhatsApp, through Instagram DMs, and you can always, just for me personally, because I do sell, I have a community that I run where I do charge money. If you want to confirm that you're talking to me, use my official email, which is in my YouTube bio, hamish@hamishhotter.com. That's my official email. Yep. Anything else, be very wary. And you can always reach out directly and just say, hey, just want to make sure I'm connected with you specifically. Just wanted to say that because,
Yeah, it's like we've spoken about this before, but social media at the moment is just rife with spam.
It's terrible. Yeah.
Yeah, but it keeps continuing because they keep making money. Like people keep falling for it. So I don't know what we're supposed to do. I mean, we've got methods that we can block people, but for example, these Instagram accounts that pop up which just have our username with like a 0 instead of an O, that chat to people and convince them that they're us and ask them for money. We report these accounts, but Instagram doesn't take them down. I don't understand why they don't. They just like, there's one that I've reported like 20 times. It's the same account because I know the spelling of it. And I reported it like probably 6 to 8 months ago and it's still there.
Yeah. It's insane that with where AI is now and facial recognition and all of this stuff, it's insane that someone can make an account that has pretty much the same username, the same title, uploads all of your videos from your Instagram feed, the same description, the same profile picture, and Instagram can't just send the original person a message being like, is this you? Before they can create that. Like they can, how is it possible that they can copy every single one of your Instagram uploads like on your feed? And just, it's obviously a copy. And like they could just at least.
We're going to rant here, but it's so true.
It's insane. Like, it's just like, how can they not just send like a 2-step authenticate to the original person being like, hey, someone's just copied your profile. Is this you? It's mind blowing that that's allowed.
All right, we've blocked them.
Anyway.
Same with like YouTube as well. Why don't we just why can't we just have, Instagram, you can only, obviously they changed the username by like one letter or something, but it's like, why on YouTube? Why can't just one person have New Money or one person have Hamish Hodder?
Yes.
And then everyone else has to find something different. I mean, YouTube, I guess we've got the verified tick, but it's still, people fall for it, man. People fall for it. It sucks. And I don't know what to do. It's just so annoying. But I mean, really, we shouldn't have to do anything. Like YouTube, Instagram, these are the company. This is their platform. Like our comment section is basically useless now because it's just spam. It's like if I spend any time in the comments, I'm literally just talking to people that don't exist. So there's just no point. Anyway, it's a pain in the ass. Just somebody please do something about it. I'm so annoyed. Anyway,
little rant over. Now we can get to the sponsored segment. Today's episode is sponsored by...
Guys, we can start talking about the stock market now. Hamish, take us away.
Before we do that, Brandon.
Yes.
Today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically by connecting your broker, makes it super easy, or you can download your trades using Excel, or you can add them in one by one if you want, and it will track all the gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans on your ETFs or individual stocks, it will do those calculations for you. Currency gains if you're buying shares internationally or you hold foreign currencies. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used to track the performance of your portfolio, as well as use the tax time to calculate things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. Use that link, sign up to a free plan, track up to 10 holdings for as long as you want. So even if you just want to try the free plan, check it out. It's free. It's not a free trial. You can just use it forever. It's great. But you can also use that link and get 4 months off a premium plan, 4 months off a yearly subscription of a premium plan if you're interested in signing up for more features. So go check it out. And as always, thanks to everyone who is supporting the podcast, who's signed up through our link for Sharesight.
Yeah. Where do you want to start today, Hamish? Do you want to start with... do you want me to start with Charlie Munger's 13F?
Yeah, I know that there's so... Look, how long is this going to be? This is going to be like a 45-minute segment, right? I saw he did a lot. He's been
written
he's been active.
13 pages of notes on Charlie Munger's 13F.
All right, we'll okay. Yeah.
No, I'll try and summarize. I'll try and summarize my 13 pages down into one sentence.
Okay.
Let's see how I go here. Charlie Munger did nothing.
Oh. Okay.
Cool. No, that's pretty much it. So he always jumps the gun. We've just had the end of Q3, and he is not someone that uses the full 45 days to hold back his trades for the quarter. He just releases his 13F pretty much instantly, like a couple of days after the end of the quarter. Well, very easy for him to do his 13F because he didn't bloody do anything, did he? But I thought this was interesting. I just include it because it all but confirms, I know I was speaking about this last quarter, it all but confirms his movements with Alibaba earlier in the year were just tax loss harvesting, because if you remember, he held 300,000 shares and then he bought another 300,000 shares after the stock price had crashed. So like, and then in the 13F filing, it was like, whoa, Charlie Munger's doubled his Alibaba position. And then the next 13F filing, it was the opposite. It was Charlie Munger has halved his Alibaba position. He sold 300,000 shares, and we were like, what's going on here? But of course, when you follow the first in, first out accounting principles, it just makes you realize that he wants to hold 300,000 shares. He had a big capital loss on the first 300,000, so he sold those at a capital loss, get the tax benefit, and then he's bought back in at a very low price for his long-term holdings. So again, last quarter I was talking about, I think that this is going to be it for Charlie in terms of his movement with Alibaba, and that is indeed correct, because in this quarter he did absolutely nothing. So he still holds 300,000 shares, which is 14.68% of the Daily Journal stock portfolio, the US Daily Journal stock portfolio. I don't know if they hold anything internationally. I'm not sure. I'd need to check that. But so his portfolio is Bank of America, 42.5%, Wells Fargo, 39%, Alibaba, 14.5%, US Bancorp, 3.5%, and POSCO, which is only 0.2% of his portfolio. So there you go. And that brings us to the end of my 13 pages. I write in very large font.
It's just one word per page.
Thoughts on that, Hamish? Well, probably nothing much to add.
Here's my thoughts. I want Charlie Munger, if he's listening, if he's watching out there, Charlie, just buy like one share of, I don't know, something insane like AMC, just one share, so that we can title our videos Charlie Munger buys AMC stock. Just one. just throw something in the mix there.
Hometown stock.
Yes, exactly. Just throw something crazy in there. Like he buys like, I don't know, 0.0001 of a Bitcoin just for the lols. I don't know. Just chucks. Give us something. If you're not going to do any activity, give us something. Give us a little nugget of something, you know?
Yeah. But something to nibble on.
Yeah. Anyway, that's my thoughts on it.
That's fair enough. Let us write the most outrageous clickbait title you've ever heard.
Exactly.
And get squillions of views while saying absolutely nothing. That's the YouTuber's dream, isn't it?
Yeah, exactly.
Anyway, that's Charlie Munger, everybody. With that said, you want to talk about Fed minutes?
Let's talk about the Fed. Yeah, so we've got a bit more information.
Let's talk about, ladies and gentlemen, we now move on to our discussion about the Federal Reserve.
Yeah, the most important part of our podcast. No, so we got the Fed minutes from the September meeting, where they of course hiked 75 basis points. So now we can see what were they actually thinking. What did they say around?
What were they thinking?
What were they thinking? Just in the minutes, it's just like, stuff it, do 75, stuff it, do 100 basis points. It's a quote from Jerome.
No, Cheryl, we're not doing 100, says Jerome.
That's it.
75 is our max.
Jerome holds a gun to someone's head. I said
Gerald's
75.
Like, oh, let's do 2%. Oh, no, Gerald.
It's the last time. Okay. Trapdoor opens up. Whoosh, just falls down. No, none of that happened. It was pretty boring, honestly, what kind of happened out of the minutes. So they essentially just reiterated their much stronger stance on inflation. So they're trying to get inflation down finally, which is kind of something they've been talking a lot about over the last couple of months. They also mentioned that a couple of the officials were quite surprised by the pace of inflation, which is not. That's not particularly kind of shocking. They also said that high interest rates will stay in place until prices come down. So a lot of people took that as being quite negative. And part of their reasoning is that high inflation is having a particularly negative impact on lower income households. So their priority is to get inflation down to ease the cost pressures that are being felt by the most vulnerable people in the US. So again, makes perfect sense. Again, they said rate hikes are likely to continue and to remain high. So just reiterating this point, which I think is good. I mean, I think a lot of people were worried that the Fed was going to be they were slow. Now it seems like they've picked up the pace, that they're really, at least from what they're saying, their intention is to continue pushing on this until it gets down and not make mistakes that the Fed's made in the past where they go too easy and it comes.
And that's
back.
what Ray Dalio was concerned about. Like, if we see like inflation come down a little bit, maybe they just don't do anything.
Yeah.
But no, it definitely does seem like they're going to keep pushing higher and higher rates. There was a line, and I've already said this in a previous podcast episode, quite sure when it was, that in the last press conference by Jerome Powell, he said, look, we're going to keep pushing interest rates up until we get inflation back down to 2%. We've seen the effects of not acting decisively enough. And we want to avoid, like we saw through the 70s, the consequences of not acting decisively enough and just playing a wait and see approach. So we are not going to do that again.
Yeah.
That's basically what he said. So it's like, oh, all right, well, that's pretty black and white.
Yeah. And the situation now is a fair bit different than other stagflation kind of environments because the economy is still, like, in terms of the labor market, is very strong. And that's actually another kind of piece of data that we got this week. So last Friday, the jobs report came out, which showed that the unemployment rate had actually continued to fall to 3.5%, which indicates that the job market is still very, very hot. So businesses are trying to hire as many people as they can. And you know, that's a reflection of inflation. And shortage of labor is one of the key drivers of inflation. So that's kind of the situation they're in, where they kind of have quite a bit of room on that aspect to raise interest rates. Where if they do slow down demand, rather than putting the US into a recession, it may just ease some of the labor market pressures, which are running very, very hot. It's like the lowest unemployment rate since December 2019. And before that, it was the lowest since 1969. So it's, as fully employed as it's ever been, basically.
Yeah, it's pretty crazy. The demand for workers right now is high.
Yeah.
So, yeah, exactly. And Jerome said that as well in his press conferences. Like, he doesn't say it quite as brutally. He likes to use, like, we don't mind seeing a softening in the he's basically saying, look, there are so many people that have got jobs right now, and there are, so many companies that are struggling to find workers that if we cause some unemployment, we don't really care.
Yeah.
They do care, but it's one of the levers where, they've got room to move.
Yeah.
They've got room to push that lever a little bit. So
yeah,
they probably will. Man, I would hate to be like a person like Jerome Powell. I mean, it'd be great if you had a high interest rate environment and you come in and your term, all you get to do is just lower rates. That'd be nice.
Yeah.
Guess what, everybody? Rates down again. Yeah. Enjoy that. But to be like Jerome Powell right now, knowing that every uptick in interest rates, you're like going to cause people to lose their jobs or businesses to fail or this or that. It's just like, it's just a painful thing to do.
Yeah.
But must be done.
Yeah, it is kind of crazy because, most of the last 30 years has just been whenever there's been some kind of economic shock, they've had this lever where they can just ease a significant burden for people. Like, so if everyone has a mortgage, a lot of people have a mortgage, they can just lower interest rates down and everyone can just refinance. And that's a huge, weight off people's shoulders, just that's available. And that's something that's not available right now at all. It's kind of interesting. One part of the minutes that the market reacted fairly positively to. So when the minutes came out, the market was actually up on the news, even though they kind of indicated that they're continuing to be harsh on interest rates. They said out of the minutes, several participants noted, particularly that in the current highly uncertain global economic and financial environment, that it would be important to calibrate the pace of further policy tightening with the aim of mitigating the risk of significant adverse effects on the economic outlook, which essentially indicates that if the economy does deteriorate, then they may slow the interest rate hikes. So, but in the scheme of everything they said during the meeting, it seems like, it looks like they're continuing to be as harsh as they can on inflation, which is a good thing. That was pretty much it. The Fed's long-term interest rate expectation is about 4.6%. So that means that they're expecting to do 2 to 3 more hikes before hopefully not having to do any more to see if it works. So, it's kind of yet to be seen so far, but month by month we can keep an eye on it and see how it goes. So, yeah.
Man, just on a personal note, my apartment's going to be finished like midway through next year, so I'm going to be running into like the hottest interest rate environment I could run into, I think.
So you don't have a mortgage on that yet? Is that right?
No. Okay. No, it's still being built.
Yeah. Okay. Yeah.
I am lucky that I can utilize an offset account.
It may well be that we go, right, farm's fantastic. We do more at farm. We need to
Can you hear that?
Yeah.
What we need to be aware of though.
We'll probably stop here, I guess.
Flippin' hell. Sorry, everybody. I don't know what happened.
Yeah.
I have no idea. It's just next door, but I think it just got amplified a bit. Anyway,
Jeez,
maybe we can cut that. Do you want to just leave that in?
I don't know. Whatever. We'll just leave it in. We can't jinx ourselves again. At the start of the episode, we said we haven't cut in so long.
We haven't cut in a long time.
We're not going to cut it. We're not cutting it.
All right, we're not going to cut it.
We're not cutting it.
But yeah, what was I saying? Just something about. Oh, that's right. Yeah. Just my personal note of running into high interest rates, but that's okay.
Yeah, I mean, it is going to be tough. I think a lot of it hasn't been seen just yet because a lot of people do. I mean, even in Australia, most people would have 2 to 4 year fixed rates, hopefully. So at least a lot do. So those haven't rolled over yet, but you're right. Like, yeah, I mean, next year, not just yourself, but a lot of people will start to see those higher rates, and we really don't know where they'll be. That's the truth, right? Could things be a lot? Things can change so quickly. Could they be a lot better conditions next year? Sure. Could it be a lot worse? Sure. Could it be around the same? Sure. Like, we really don't know. It just is what it is. We'll just have to see what it is. Yeah.
Yeah. All right. You have a follow-on from this story as well, don't you?
Yeah. I can keep going on. So, yeah, we also got this week an update out of the IMF, as the International Monetary Fund gave us a kind of an update on their outlook. The IMF is just the financial agency of the United Nations, so just a big finance body that tracks the global economy and gives their opinion on what things they see coming in the future. And their outlook is not too positive, I'll say, for next year. They said that the worst is yet to come. They're predicting global growth to slow to 2.7% next year, which is pretty bad for global growth, which includes, some pretty significant growth economies around the world. Yeah. It'd be the weakest growth profile since 2001, excluding 2020 and the GFC. So if you take out those two obviously very, very negative circumstances, it's the worst since 2001. So yeah, I mean, look, that quote is like, if you remove the recessions, then it's the worst. But I think it's indicating that while we're not in a global recession, it's the worst it's been since those 2 periods where it has been. So that's just that's kind of there you go. Not a great thing. They predict.
The IMF said the worst is yet to come. That's funny. They sound like a YouTuber.
Yeah, they say
follow the IMF YouTube channel or something.
Yeah, sounds like Jeremy Grantham or something. It's crazy.
Yeah.
They're also predicting that a third of the global economy will see a technical recession by the middle of next year. So that's 2/4 of negative GDP growth. A third of the global economy will be experiencing that. Global inflation is predicted to peak later this year at 8.8% before slowing to 6.5% next year and then 4.1% in 2024. So their position is that inflation will ease next year, but we're going to be well above the healthy range for a number of years going forward.
Right.
Which is not great, but that's kind of what happens when it's difficult to get inflation down very quickly. They also expect that many countries will have to follow the US in tightening their monetary policy. So the US has been one of the harshest out of the major countries in terms of their increases. And what that's done to against currencies like the euro and the British pound and even the AUD is that the US dollar has gotten a lot stronger relative to those currencies. And that essentially works because bonds and savings accounts in the US offer better yields, offer returns. So it attracts people to those currencies, which strengthens them. And if other countries don't follow, then it can be really crippling for some businesses. And the worst type of business that it's bad for are businesses that collect revenue in their local currency, but they have expenses in US dollars. And that can be a lot of businesses. So like think of like a retailer in the UK, for example. They're collecting all of their money in their local currency, British pounds. But if they source their products internationally, then they might be transacting in US dollars, like a lot of businesses do when they do international transactions. So those businesses, as the US dollar rises, are getting absolutely destroyed. So the IMF was basically just saying that we should expect that other central banks will have to follow suit to get their currency relative strength back up against the US dollar. So yeah, that's pretty much all I had. Bit more doom and gloom. I thought we were having too much fun, like we were laughing.
Yeah, bring us down, mate.
We were laughing. 200th episode. I just had to give us, snap us back to reality. No,
that's interesting. So I'm just drawn to the line. Where was it? They predict more than a third of the global economy will see a technical recession, and that was by when?
I think it was by the middle of next year, or at least by next year.
So they're essentially saying that like the next 2 quarters are going to be bad.
Yeah, well, so
that's essentially what they're saying, because there needs to be 2 quarters, and if they're saying it's going to happen before the end of before the midway point of next year, then the next 2 quarters are going to be bad. Yeah, is essentially what they're saying.
And some countries are obviously already at that state. Like the US is already in a technical recession, right? So some countries are already there, and they're saying, including who have already gone into a technical recession, by the end of next year, a third of places will.
There you go.
Yeah, which is massive. So we'll just have to see how this all kind of plays out. But there's a lot of negativity.
Wonder how Australia will fare. We'll be right. We'll just dig a bigger hole.
We'll just dig a big hole.
We'll just dig another hole somewhere. Mine something else.
Yeah.
Get some more mortgages going.
It'll be interesting to see, because we are, a lot more exposed in the US to mortgage rates, because we have these short-term fixed rates. So, I mean, we'll just
that's what we were talking about last week, wasn't it?
Yeah, so it will be interesting to see how that plays out, particularly if inflation gets worse here. That, although it has been a lot less worse than the US, at least so far. So, we'll see. Should be right.
Interesting.
It'll be right.
Should we move on?
Yeah. What should we talk about?
All right. I'll talk about Tesla deliveries. There's not too much to talk about here. There's a couple of interesting. It's kind of like 2 or 3 stories bundled up into one, because I love my Tesla.
Have Tesla.
Yeah, I'm such a Tesla fanboy. Everybody always jumps on me for just thinking that I've got I'm just buying Tesla stock hand over fist. Like I'm one of these pump Tesla YouTubers. It's really not the case. I just love the company.
That's not what you said off air. That's what Brandon said right before this podcast. He said, I have to talk about Tesla because I'm pumping and dumping it. Oh, sorry. We're not supposed to.
No, we're not supposed to say. Damn it. Now we're going to have to cut that out. Oh, no. Anyway, another quarter. So we've got Tesla deliveries. They had a record quarter on production and deliveries. They produced 365,923 cars. It's quite a lot.
Jeez.
366,000. So that is
Is it a record?
Solid record, yes. And they delivered 300. I believe the record was like 308,000 before this. Don't quote me on that. Somewhere around there. Deliveries of 344,000-ish. So they delivered a few less vehicles than they produced. But what was interesting actually is that they attached a little paragraph explainer to this release. It's not a very long release. It's like a quarter of a page. They have this little paragraph which says, historically our delivery volumes have skewed towards the end of each quarter due to regional batch building of cars. As our production volumes continue to grow, it has becoming increasingly challenging to secure vehicle transportation capacity and at a reasonable cost during these peak logistics weeks. In Q3, we began transitioning to a more even regional mix of vehicle builds each week, which led to an increase in cars in transit at the end of each quarter. These cars have been ordered and will be delivered to customers upon arrival at their destination. So essentially what they're saying is, up until now, because they've been so focused on getting as many deliveries in each quarter, they've basically paid through the teeth for their for global logistics companies to be able to deliver or ship these cars as the end of the quarter approaches. And they're basically saying now, look, we don't need to do that anymore.
Right.
So, if it turns out that we miss some of our deliveries in one particular quarter, that's okay. We know they're going to be in the next quarter's deliveries, because there was a time where there was a time where Tesla would actually get everybody in the company, like in the legal department or any department in the company, to focus on delivering cars to customers before the end of the quarter. It was insane. They'd actually get volunteer Tesla owners to come to Tesla delivery centers and just provide general education about the delivery process to people that are about to take delivery. It was crazy. They were so focused on deliveries. But they're basically saying, look, we're at a point now, we know we're doing fine. We know the monkey's off our back. We're just going to take it at our own pace. And if that means that some deliveries go into the next quarter, so be it. That's just the way it's going to be from now on. So I think that's pretty interesting.
Yeah, I don't think that's a particularly big deal. I think it's better that they're able to do it in a more efficient way than to try and cram them in.
Crunching. Yeah. Or paying like double the rate for shipping of cars to a certain country because it's 1 week before the end of the quarter or something. But yeah, anyway, so that's like the first part of the story. Delivery is pretty strong. We kind of anticipated this. It's kind of bundled up in the delivery numbers. We were talking a little while back as to how Tesla was struggling in China with their deliveries because of the Shanghai lockdown. You remember us talking about that story one week? Well, that is now well and truly over. Tesla sold 83,135 China-made vehicles in wholesale in September, smashing its record of monthly sales in China. The number marks an 8% increase from August and outpaced the more than 5% month-over-month growth of all wholesale electric vehicle sales in China. It set a new record for Tesla's Shanghai factory since production began in December 2019 and topped the prior sales record of 78,906 in June.
Wow.
There's nothing really to add here. So I just said it's noted down. It's good to see that manufacturing's back up and running for China. It kind of gives you a little bit of insight into just China manufacturing because, of course, they've had COVID lockdown. So it's like, okay, well, now that the Shanghai factory is now up at full steam, I would hazard a guess that most factories generally are also probably back up to close to full steam, which is a good little, a good little piece of information for just the global economy, because we know that China manufactures 30% of the world's stuff. So.
Yeah, it will be really interesting to see how that plays out, especially over the next couple of months, because I've seen quite a few examples of particular shipping routes where prices are pretty much back down to where they were during 2020 or early 2020. Certainly, maybe like an 80% drop in the cost of shipping a product from Shanghai to a particular area. So it'll be interesting to see if that has a meaningful impact on inflation. You would think it would. At least it would slow down maybe some of the increases, whether businesses, when they experience those cost reductions, whether they pass them back onto the customer immediately. I think we'll have to see if that happens. But certainly in terms of
hopefully it just helps out the supply side a little bit more now.
Yeah.
Yeah,
interesting.
Yeah, so that's sorry. Yeah,
all I was going to say is, so they're doing 80 plus thousand out of Shanghai. That's a month. That's insane. That's insane.
It's a big plant. You should see some of the drone shots of that plant. It's enormous. It's huge.
Yeah,
it's like comparable to the one we saw in Texas, except it's fully functioning.
Yeah, that's insane. Yeah, crazy. So Tesla every time they just continue to impress.
Yeah, they're doing pretty well. Another thing that I just wanted to touch on really quickly, just a tidbit from Elon on Twitter, is that he posted the other day, quote, excited to announce the start of production of the Tesla semi-truck with deliveries to Pepsi on December the 1st.
There you go.
So I wanted to include this because for those that can't remember, and fair enough if you've forgotten, this truck was announced on the 15th of December, 2017.
That's crazy.
Tick,
what's that, 5 years or something? That's insane.
Yeah, 5 years ago. Yeah.
Wow.
So this has been in the works for a while, but it's been a long time. And I think Pepsi was one of the earliest companies that actually just put down an order, said, yeah, we want these. Yeah. So it is good to see that Tesla is actually pushing forward on deliveries of the Tesla semi-truck. And I think that the reason I'm so excited about this, honestly, I am going to sound like a bit of a fanboy when I say this, but I do genuinely believe that this could almost revolutionize freight transport, because in that PowerPoint that they showed back when they announced it in 2017, they showed that if you can convoy up a fleet, or not like 5, 6, 7, however many Tesla semi-trucks, and just have them delivering freight, and they're in a fleet, they're in a convoy, then the economics of that actually beats rail.
Really?
It beats rail. It's cheaper than rail.
That's crazy.
Running it off electricity. Yeah, running it off of battery-powered
Oh, God, the roads
trucks.
are going to be full of trucks.
Yeah. Well, this is the thing, is that Elon's one of the reasons he's pushing for the Boring Company to dig more tunnels is because he's realizing that if he can achieve what he's trying to achieve, traffic is going to be ridiculous, because everyone's going to be using the Tesla Semi for freight. Yeah. But beyond that, if we have full self-driving Teslas going everywhere that are obviously run on electricity, the cost to hail one of those is going to be cheaper than a bus ticket. So it's like, would you like to sit on a bus with other people for 45 minutes to get to your work, or would you rather hail a full self-driving green, robo-taxi, which sure, it might take also 45 minutes to get to work, but you just get to sit in the car by yourself and chill out. It's like people are going to choose that.
Of course, yeah.
So there's going to be like all the people that catch buses and whatever are just going to start catching driverless taxis. There's going to be a lot more of us. So it's like, wow.
And that's the thing,
crazy.
He's obviously doing some great things, but it's like, what's he going to break on the way through? Like the energy grid is going to be destroyed in I just like, especially if trucking,
significant investment in it. Yeah.
If you're doing a lot of supply side transportation with electric vehicles, that's got to be an insane increase in the demand for electricity. So it's a lot of these things are going to have to change. They're going to have to change dramatically over the next decade. It's not even going to be a question of should we switch, how we generate electricity or focus on improving the infrastructure. We will be forced to do it. Because there'll be no
look at this. A
alternative.
long range model for the Tesla Semi is going to have a battery size of 1,000 kilowatt hours, or a megawatt hour battery, and a standard version will have a 600 kilowatt hour battery. Jeez. For context, my Tesla, which gets me 500 kilometers on a charge, that battery size is 75 kilowatt hours. So 75 kilowatt hours versus 1,000 kilowatt hours.
Jeez,
it's like massive. To charge one of these Tesla Semis is going to take a lot more juice. Well, more than 10x the amount of juice that my car takes.
That's crazy.
So there you go. Yeah.
Yeah, it's
pretty insane. So yeah, you're right. There do need to be significant improvements made in energy production and grid storage and that sort of thing. But I guess Tesla also, that's part of their business. They do that as well. Grid storage solutions.
He can fix that
solar panels. Yeah, he can just fix it all. Hey, Elon, by the way. Can you just fix everything?
Where's the Roadster? Come on.
Now
we've got the semis coming. The Roadster's got to be next in the pipeline, right?
I hope so. Well, the Cybertruck's
when did he
next.
Oh yeah,
the Cybertruck's there. The Roadster was announced. Remember, it was announced on the same day because it came out of the back of the Tesla Semi.
Seems like that was ages ago.
Yeah, it was 2017.
Oh, sorry, the same day as the truck. Oh, okay, yeah, wow, yeah.
Same
Jeez,
event.
5 years ago. Yeah, so that's gonna be seven. It's gonna be 7 years before anybody sees that. My God, it's 7
insane.
years in total, not 7 more years.
Total. No, I bloody well hope not.
Knowing Elon, probably.
Such a cool car, but man, that's the thing. This is the danger when you announce things too early.
Yeah.
I think I like one example, which they've kind of gone away from recently, but they used to do it. Bethesda, the game studio, Bethesda.
Yeah.
Like Skyrim, Fallout 4, all these massive games that take years and years and years to build. They announce them 4 to 6 months before the game's released.
Right. Yeah.
So instead of going, oh, by the way, Fallout 4 is coming out, it'll be out in 4 years' time, they just don't say anything. They just wait. So no one's getting pumped or anything, so they haven't made an official announcement. Then 6 months before they release it, bang, guess what, guys? We've been working on Fallout 4. It's going to be out in 6 months. And then 6 months later, boom, there you go. You've got it. It's in your lounge room. You've got one, you know?
That should be the way that it goes.
It should be the way.
You don't want to get people hyped up too early. It's
exactly. Yeah.
It's kind of pointless.
That was the problem with CD Projekt Red and Cyberpunk.
Yeah.
They announced Cyberpunk like literally 10 years before they released it.
Yeah.
Literally like 10 years.
Yeah.
And so everyone was getting hyped. Yeah. And it got to a point where it had been 10 years and people were like, where the hell is this game? And then they felt so much pressure to get it out. They just pushed it out. And we all know what happened there.
It was garbage.
Rubbish release.
Yeah.
Barely worked. I'd argue that it didn't work on Xbox One and PS4.
Absolute disaster. Yeah.
It was a disaster. Anyway, that's
speaking of getting excited for things too early. Should we talk about VR and the metaverse?
Yeah, there's a segue. Do you want to take us through, or do you want me to?
Well, I think we both looked at this a little bit. I really haven't looked at this much. I think you've probably looked at this more than me, but okay. I'll tee it up for you. But the main kind of news that came out this week is they had their what do they call it? The Connect something event.
Connect conference.
Connect conference, where they talk about
geared towards VR and augmented reality developers.
Yeah. So kind of giving us and as consumers, we also kind of get a bit of an insight into what they've been working on and what they're releasing. I think there's a couple of things maybe we'll talk about, but definitely the most anticipated thing that came out was we got to see kind of the first iteration of what they called last year Project Cambria, right? Yeah. So they announced Project Cambria last year, which was going to be this high-end VR product that they were going to work on, and they've released it. Well, it's not released. You can pre-order it now. They announced it. It's called the Meta Quest Pro, and it's not cheap. $1,500 US dollars, 2,500 Australian to pre-order it. So. The
headset it is $1,100 more expensive than the Quest 2.
Yeah, like this is a very high end. It is very, very high end system.
I can understand why they just put the Quest name on it, but I could have also understood if they just called it like Project Cambria, because you can understand they call it the Quest, and then maybe people that are Quest fans they'll get it as well. It's like part of the Quest lineup. I've got the Quest Pro. Yeah, that's right. I've got the iPhone 4, whatever. What are we up to? 14 Max or whatever it is.
Yeah.
It's kind of like that, but but it is like a different machine. It's like the cutting edge. Yeah. It's like the best they can possibly do at this moment in time of VR software, hardware and software. So, yeah, should I just take us through?
Yeah, take us through.
The new headset costs $1,100 more than Quest 2's headset. It contains new technologies like an advanced mobile Snapdragon computer chip developed with Qualcomm that helps the device produce more advanced graphics. The Quest Pro also has improved touch controllers that contain embedded sensors, allowing for better hand tracking. It's also got new lenses, which I think take up 40%. They can compress them by 40%, so they're less bulky. And it also improves reading experiences. And the other thing that I took note of, which was at the end of the Quest Pro part of the presentation, was they announced a big partnership with Microsoft. Did you see this?
No, I actually didn't see this bit.
So they actually got Satya Nadella to come on and be a part of this presentation as well. So they're actually working with Microsoft to bring Microsoft Teams functionality into the Quest Pro.
Right.
And they're also going to support, the Quest Pro is going to support Office 365 programs. So Word, Excel, blah, 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 PowerPoint, whatever, all those sort of ones. Yeah. Which I thought was interesting because, I mean, Microsoft's also working, everybody's working on some sort of VR kind of project. Yeah. So it was interesting that Microsoft were like, yeah, let's team up, let's do it. They also announced that Meta's working with Adobe as well to support some of their creative apps as well. More focused on like the 3D design, almost like CAD kind of programs.
Yeah.
Yeah, I thought that was very interesting.
Yeah, it's look, we're still so early stage with especially the software and what people can do inside. But I love looking at these kind of updates around new tech because they're really interesting. And there was actually quite a few. So they had a few kind of feature updates with the new device. You'll be able to do eye and facial expression tracking. So I think it's the first VR device that's ever been able to do that. So you can have like an avatar in the metaverse that your eyes will be looking where you're looking, and basic facial expression. So that's pretty massive to help kind of engagement with conversations. I think one of the most interesting ones is their improvements on mixed reality experiences. So the Meta Quest, the previous device, does have cameras on the outside where you can do black and white video pass through. So if you want to see where you are in your environment, you can switch off the VR and just keep the headset on and still be able to see where you are. Quest Pro now has better cameras to enable full color pass through, and there's so many use cases for kind of a mixed reality experience now. So one is like you could have the headset on and your computer display could be in VR, but you could still use your physical keyboard and mouse, which makes a lot of sense. And again, I think a lot of these things, it's easy to kind of dunk on Meta because there's not that much you can really do, and maybe the experience isn't as good as it will be one day. But I can definitely see a world where you just have a keyboard and mouse and you don't even have a display on the desk. You could just have the display in the headset. And that's just what's normal. You don't have barely anything on your desk. So I think that was really interesting. They also announced in relation to that something called Magic Room, which is where multiple people can share the same mixed reality space, which I thought was cool. So if someone has a big desk, in their version, the desk will be physical. But for the other person can join and it will just recreate a virtual desk. So they're both sharing the same room, but there's different items in the room. Some of them will be VR for one person and physical for the other person and vice versa. And I think that's pretty cool, allowing two people to kind of join into a room while utilizing the physical space. So
I think this has much more. I think this will be bigger than people realize. Because I think that, for example, I like having an office space because I know that, myself and JJ and Claude and Aaron, we all come to the same space and we can talk to each other, oh, bro, I just want some clarification on this section. No worries. We go through it. We can just, figure that out. They can show me previews of what they're working on and all that's great. However, if you can do all that, if you can have this office environment in VR, then instead of just, putting out a CCAD and being like, oh, look, I'm looking for a video editor in Canberra or something. And I just have to find, people that live in Canberra, that's my selection base. I could get someone from Romania or the UK, Texas or something that is just like really, really good. Whereas I wouldn't be able to employ them previously because it's just like, oh, sorry, you live so far away. Like I need you to come to the office kind of thing. Now it's just like, okay, no, we can. You can be over here. You can be over there. You can be over there. And we can just chuck our headsets on a couple of hours a day. And we can just check in, how are you going with this? How are you going with that? Yep, good. If it works well, then I think it will be a very big game changer. And I think it's going to be very important. I think COVID's almost like accelerated it a bit because we've had so much working from home. Yeah. I think that's kind of brought out the flaws in like working from home. Like people aren't that productive and talking to people's a lot harder, like talking over email. There's always like, oh, does that come across well or not well? It'd be so much better. And I think that's obviously the way of the future. Companies don't want to pay for office space. People like working from home. Sweet, no worries. We'll just put the headsets on. Everybody comes into this meeting. What are you doing? What are you doing? How are you going? Yeah. I think that'll be very seamless for a world that I think we will start to work from home more permanently.
Yeah.
But I think it like beyond that, it already has like real world applications. Like VR is very handy for people like architects, anybody that's designing or building something in 3D space. I mean, architects, they whip on the glasses with their clients and they can literally stroll through a new soccer stadium that they're designing in, Soul or something like that. They can just like, oh yeah, you see, this is kind of the volume that we're going to have. These are the overhead beams that we're thinking, and so it already has a lot of real world application. But I think people are very dismissive because they're kind of like, oh, gamers like it, whatever. They play Skyrim in VR or something. Yeah. Good for you. But I think in the future it's going to be massive. People just don't quite realize what they could do with it yet.
Yeah, people definitely are underestimating, at least generally, what it's going to be, which is what I'm excited about. I'm not even necessarily excited about what's available now. It's pretty laughable. I mean, there's some use cases, but it's still it's kind of fair that people kind of dunk on the first iterations of all of this stuff. But yeah, I'm looking like 20 years out. I think it'd be hard to find someone without a VR or AR style headset, whatever that final form is. I think you'll be hard to find someone in even in 10 years who doesn't have one. Did you see the wrist, their device, the wrist device thing?
Oh no!
So this was at the end. This was right at the end of the conference, and this to me is mind blowing. So this is something they've been working on for a while. They've created a prototype. It's not a real product. It's a prototype device that goes on your wrist, and it's essentially going to become a way for you to use your brain to essentially control the VR device. So Zuckerberg's spoken about this previously how they can make this device where it can detect the neural connections with like slight movements in your wrist and slight movements in your finger, and it can track those and correlate them into movements in your VR. And they showed a demo of this, and it's kind of insane how good it is. So they had I don't know if many people know what like Subway Surfers is. It's just a basic kind of video game that you play on your phone where you swipe left and right. And they had someone playing this, and at first they could do it by just swiping their finger. So they're basically thinking about swiping their finger and swiping, and it was doing it it was moving the thing without having to touch it. But this technology learns, it uses machine learning. By the end, the guy was barely moving his wrist. Like he was basically just thinking about moving his finger. With a slight, tiny movement of his finger that you couldn't even notice. Like I was like trying to like look and like, okay, yeah, he's moving his finger a little bit, and he was able to control left and right on this game, which is kind of crazy. Like that to me was insane because it means that eventually you'll be able to, turn the volume down on your phone without touching your phone. Like you could just do a little finger movement down kind of thing in your pocket or like just by your side. It was kind of crazy. I'm surprised I didn't spend more time on that because that was insane. I've never seen anything like that.
Although the problem with that is when you forget to turn it off and you're like, it's just you bend your finger accidentally and your volume just goes like,
Uploads all your photos to the internet or something. Like starts a group call with like 20 people. No, turn it off.
No, cut it out. No. It's funny.
But yeah, that's gonna be crazy because it reminded me of like the Neuralink stuff that Musk is working on. But it was interesting that they were able to do it from detecting the neural signals through your wrist. It's kind of wild that's just the beginning. That's insane. Like I can't imagine how good that's going to be in
10 years
50.
time.
It'd go
Probably
way
close.
out. Like 50 years, you'll just be able to think and control a computer in so many ways.
It's interesting where it's going. Anyway, should we move on?
Crazy world.
Well, we've probably run out of time. Do you want to do a couple Q&A questions and then we'll get out of here?
Yeah, let's,
what do we have for Q&A? Oh, maybe do you want me to, I'll ask you this one. We've probably got only time for one Q&A question, so we'll just run through this one. Question for the next episode. If I buy Berkshire stock, is it similar to investing in the fund, like investing in a high quality mutual fund or ETF, or am I getting it mixed up? I think we've answered this similar question to this in the past.
Yeah, I think.
What are your thoughts?
All I would say is I think, remember the Berkshire, while yes, Buffett does manage the investment portfolio, most of Berkshire is wholly owned businesses. So you're really buying into a company. You should think of it as you buying a company more than buying even a mutual fund where a manager is trading shares, because Buffett's not going to be selling some of these large businesses. Even the stocks in the portfolio, he's probably not going to sell and trade them like a mutual fund might actively trade a whole portfolio of businesses, if that makes sense. So I don't really think of it as an ETF or as a mutual fund at all. Maybe it'll perform similarly. And yeah, you're essentially betting, I guess, on the performance of Buffett and Munger, and then whoever follows them after. But it's more like you're buying into the businesses that Berkshire owns. So to me, if I was to buy it, I would want to have a deep understanding of the big companies that they own. So that's kind of my thoughts on it.
You are right in a sense that a lot of investors these days just call Berkshire Hathaway like a
lot of people
Buffett
do.
ETF.
Yes.
Because they've just got so many wholly owned businesses. They've got so many stocks that are, basically permanent features of their portfolio that, it's basically just buying like the Buffett mutual fund.
Yeah.
But no, I think you raise a good point. Whereas a typical mutual fund or something, they might be in and out of stocks. You're basically buying into something that is not going to change. They're not going to get rid of Geico tomorrow. They're not going to get rid of Apple. They're not going to, Berkshire Hathaway Energy, they're not just going to sell that off. So that is very true. Although, you can understand why people think of it as like the Buffett ETF. And a lot of people do, just like they literally invest in it like it's a Buffett ETF. They're just like, it's a diversified group of businesses, so I get some diversification. It's also run by one of the best capital allocators, if not the best capital allocator in the world, in Warren Buffett. So here's my money, and I'll see you in 50 years.
Yeah.
Hopefully Warren Buffett's still around in 50 years. I think highly unlikely, but
Yeah, we need some of that tech.
Maybe he's got enough money to. Has he got enough money to buy some life extension technology?
Yeah, we need that brain upload that we were talking about last week.
Exactly. Yeah.
All right.
There you go, guys. Should we wrap things up there? That's bang on 1 hour.
Yeah.
So I think that's a good place to wrap things up. Thanks, guys, very much for tuning in as always. Man, we definitely went off on some tangents today, but I do like it when we just get super conversational and get meta, I suppose. Thanks very much for tuning in, guys. Much appreciated. Thank you to Sharesight, as always, for sponsoring the podcast. With that said, hope you enjoyed, and we'll see you guys in the next episode.
See you guys.